10-year note yields moved higher midweek, today closing at 465, up about 5 basis points from yesterday's close. A couple of things on the docket today. We had durable goods. They came in mixed. We also had a 5-year note auction, a record $70 billion 5-year auction, which came in with lower than expected demand, or lower demand, I should say, helping to prop up yields. Now, over the last month, 10-year's up about 40 basis points. So it's been a busy month amid mixed data, as well as Fed rate cut odds moving south. Right now, we're currently looking at about 20% odds of a June rate cut, and we're looking at just under 100% for September. So right now, the market really leaning towards a September rate cut. It'll be interesting to see what happens over, obviously, the next couple of weeks. We get a lot of data coming out, as well as that May FOMC, followed by the Powell presser. So that's really what May FOMC is going to be all about, the Powell presser and 10-year note yields, which have risen significantly over the last month, obviously leaning towards the fact that the Fed will probably be on hold at least over the short term. And again, yields moving higher, closing at 465. Now, what does this mean for volatility? Well, check out that CVol index over at cmegroup.com. You will notice volatility was up today as yields were up. That kind of goes along with our historical seeing yields and volatility move in tandem. Yields right now volatility hovering at about the midpoint of the year-to-date high and low. So right now, we're seeing volatility kind of waiting, coiling for that next catalyst event, whether it's something from the Fed, whether it's something from the economy or something else. Market is right now, volatility-wise, waiting for that next event. And today, volatility was higher. Lastly, let's talk about what we have tomorrow. Tomorrow's Thursday, which means to get our in-the-moment look at the job market via the claims number. We also get first quarter GDP. Now, the GDP now put out by the Atlanta Fed saw a decline from yesterday's mark of 275 to today down to 270, while we're seeing other market expectations for between 2.5 and 270. So right now, that'll be the key piece of data for tomorrow. We also get a 7-year auction to follow in the steps of the 2- and 5-year from earlier this week. No Fed speakers to speak of as the Fed remains in its blackout period ahead of May FOMC. So midweek, 10-year note yields continue to inch higher today, getting as high as 465 ahead of tomorrow's claims, first quarter GDP, and a 7-year auction.